This is your monthly SA REIT Chartbook summary. I'm Ian Anderson, Head of Listed Property and a Portfolio Manager at Merchant West Investments.
A stronger rand and lower bond yields help South African REITs register strong gains in July. On average, REITs rose 4.8% during the month, but are still down more than 5% in 2023. The sector was also helped by Liberty Group's proposed scheme of arrangement to acquire the Liberty 2 Degrees shares not owned by Liberty Holdings at a price of R5.55 per share, which was more than 40% above the market price at the time of the announcement. The price, while reflecting a substantial premium to the market, still represents a more than 20% discount to the last reported net asset value of Liberty 2 Degrees. SA Corporate successfully completed the acquisition of Indlu Place during July. Both transactions reflect the steep discounts to net asset value that persist in the sector today, as well as the opportunity that exists for mergers and acquisitions to unlock significant value for shareholders. In other company news, Accelerate Property Fund opted not to pay a dividend in their 2023 financial year. As a result of a further R800 million write-down in the value of the company's property portfolio, the loan-to-value ratio has risen to 44.8%, and the board is of the opinion that the most prudent use of cash flows is to continue to pay down debt. The share price was down 2.3% during the month. Liquidity in the sector continues to improve. Over the past 12 months, approximately 50% of the value of the sector has changed hands. In the early 2000s, that number was around 25%, but has been improving steadily as ownership across the sector has become more widespread, and the larger REITs, like Growthpoint, have been included in widely followed equity indices. The average historic dividend yield across the sector has declined to 9.4%, reflecting both a rise in prices and a 10% drop in trailing 12-month dividends. A large part of the decline in trailing dividends can be attributed to the fact that Fortress is no longer paying a dividend. Adjusting for Fortress, dividend growth has been flat over the past 12 months. The impact of load shedding and higher interest rates is likely to result in only moderate dividend growth in the next 12 months, but this is already reflected in the large discounts to net asset value across the sector.
This is your monthly SA REIT Chartbook summary. I'm Ian Anderson, Head of Listed Property and a Portfolio Manager at Merchant West Investments.